hope you're doing well. In this video, I'm going to talk about my personal trading strategy and what I personally like to look for in the charts. There are a few things which I will personally do when I'm trading, but this is just one model which I find to be highly accurate, very precise, and definitely something I can always capitalize on when it makes itself present in the charts. So yesterday I traded this in here and we had this run above this high. So the first thing that I look for, I like to see, if I'm bearish and I want to sell, I like to see a clear uptrend like this where we've got several lows being respected, because retail would see this as a trend line. So what I like to do is, when I see this in price, I know that the market is going to want to sweep these lows at some point. Okay, so that's the first signature that I'll look for when I'm trying to go short. The second thing is I like to frame my model around the new week open gap. So if you look to where the new week open gaps are on your personal charts with whatever market you're trading, and just study how price responds to those levels. Okay, so that's the second thing. The third thing I need to see is, again, buy side liquidity or relative equal highs get taken out. So as you can see, the Nasdaq market opened up at 9:30 yesterday, as it does every day when the markets are open, and it pierced these highs up here. Right, so when we got that run above those highs, instantly my mind is thinking, okay, well, we've run a form of buy side liquidity, it's likely to seek a form of sell side liquidity. Where does sell side liquidity rest? Underneath all of these lows here, 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 and here. Okay, so this was my original target, and you can see how the market dumped completely into that level right there. Okay, so that's the context. In terms of an entry and framing where I can get in, this is on a 5-minute time frame. If we go down to a 1-minute time frame, we can see that high up there. Okay, so we had the pierce up there, and then we ran down, right? My timing is between 10 and 11, or 9:45 to around 11 o'clock. So all of this in here, okay, you can see it was a very volatile morning. So you ran all the way up, pierced those highs, came down, came back up, didn't take out the high. Alright, I didn't really like this in here because it could have very easily ran back up. We've got this daily buy side liquidity up here, okay, which I believe the market is going to be drawn to maybe today. We'll have to see how this session plays out going into New York, but daily buy side liquidity at 15469. Okay, so with this yesterday, and we had this drop off, okay, we could have ran higher. I would needed to see more in price. All right, so I wanted to see like a market structure shift. So we was hanging around a little bit in there, and again we respected this new week open gap down here. And then as we had this, all right, I was thinking on this leg up we could potentially continue the momentum up to that daily buy side, but we didn't get that. I saw a slowdown in price. Okay, it was struggling to trade above here, and then instantly I saw it break down, and we had the market structure shift underneath this low in here. Okay, so we've also got this breaker. So high, low, higher, high, market breaks down, and then we've got a fair value gap in there as well. All right, so as soon as the market traded up into this gap in here, inside of this, I went short right on this candle. Okay, so I was very quick with it, Okay, so I'm going to zoom all the way in. Okay, so you can see I went short, so this is zoomed in. I went short at 15394, which is 15394, which is right here. Okay, so as soon as we wicked up into that, that's where I went short, and then I wrote it down here. I added one more here on this fair value gap, and then I got out just down here. Okay, where that blue arrow is at the liquidity level. Okay, so that's the executions. So yeah, that's the executions, and you can see how when the market got to this sell side liquidity level, look at how we just ranged around in there. Okay, it stopped the market dead in its tracks. We ranged and then we traded back down to, guess where, the new week open gap between Friday the 11th and Sunday the 13th of August. Notice how we rally back up in the PM session, and then again staying around that new week open gap. So going into today, you can see how we've just been ranging. Obviously in the morning, let's go on to a 5-minute chart. All right, we've got these lows underneath here. We've got this low, so I do favor this buy side being taken out at 15469. So I'll be looking for anything to maybe go long on. If we get a run underneath these lows and a signal to buy the market, I'll go long. Then we'll look to capitalize on that. But yeah, the main context of this is to just talk about what I personally like to see in the charts. Okay, so again, I like to see a clear trend which retail's gonna think is bullish, a run above a high which will allow the algorithm to seek price to lower levels and clear out anyone with stops underneath these lows here into a sell side liquidity pool. And then to get into my trade, I'm using bearish PD arrays such as a fair value gap in here, or a breaker, or an order block. Alright, so as soon as the market wicks up into that, I'm selling short and then ride it down. Okay, and that's pretty much the basics or the mechanics of this bearish model. So simple runs above highs with displacement. That's ICT's 2022 model. I'm incorporating my own logic with the trend line. I like to see that trend line. That makes it higher probability. And then a dump below that. Okay, so I hope that was insightful. Oh yeah, one more thing. Obviously this is if you're bearish. If you're bullish, if you're bullish, you want to look at it from the other way around. So let's just flip this chart quickly. Right, so this is the chart flipped, and you can see how if it was bearish, all right, we have all those highs. Okay, it's too clean. The market always likes to sweep clean levels. We have the run and dump into, which would be sell side if it was the other way around, and then the reverse on that. Okay, so I'd be going long if I was bullish in here. Right, so that's the chart flipped if it was a bullish scenario, and this is the original chart, and that's if you're bearish. Okay, please leave a comment. Remember to like and subscribe if you find this content helpful. Yeah, please give it a thumbs up, because it helps the algorithm to push the video out there. Thanks, and I'll speak to you in my next one.